I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market spent the early part of the week waiting for Fed Powell's speech on Wednesday afternoon, and it headed mildly lower on huge protests in China over the COVID lockdowns. And Apple weighed on the markets as it pushed the NASDAQ down, as their supplier, Foxconn in China, had delivery issues based on these COVID lockdowns. And Fed speak continued to warn of no pivot until 2024. But Wednesday, Powell's speech at Brookings Institute lit a fire under the investors. He took a dovish tone. As he said, it makes sense to moderate the rate of increases as we approach a level of restraint to bring inflation down. But the full effect of that has not yet been felt. So that was a good reason in his mind to be slowing down the increases. He said, I don't want to over-tighten, slowing now so we can find the right level. And we're giving monetary policy a chance to work its way through the system. But, he also added, to get 2% inflation will likely require holding restrictive levels for some time to come. And simply no talk of a pivot whatsoever, and the market really was getting ahead of itself, with the S&P 500 gaining 122 points on the day and getting up to and through our first upside target for this rally. It's so interesting listening to Powell speak as he talks about getting to 2% inflation, like that will be so easy. Just remember what happened when we were at 1.7% inflation and they had the monetary spigots opened and zero interest rate policy to get it up to 2%. Of course, what did it do? Well, added to other factors, of course, we went to 8%. So now, trying to get back down to 2%, well, there's a pretty good chance if that's what they're trying to do, we might get to minus 2% and have deflation because they have no control and have no clue of how to really micromanage the economy the way they try to. Thursday, the markets chopped around. The PCE came out. That's the Fed's favorite inflation indicator that comes out in line at about 5% year over year and still a very hot number. And then on Friday, the employment report came out very hot. Payrolls increased by 263,000 versus the estimate of 200,000. But wages were the big issue. Hourly earnings went up 0.6% versus the estimate of 0.3%, and year over year gaining 5.1%. These are very strong wage inflation numbers, and that's one thing the Fed has to be very concerned about. So the bulls, many of them writing to me, thinking that we have been off to the races, they dumped their positions. S&P 500 before the opening was down 70 points very fast, but since has cut those losses in half, as of course we are in a period that is still bullish. The stock market, well, it moved to the upside through our first target, which was at 40.65 on the S&P 500, and then towards the next one. I'll show you that level a little bit later. I'm hearing a lot of snorting from the bulls, and it's so typical that they do that while they're still lying on their back. Recently, I heard one of my favorite economists, Mohammed El-Arian. He's the ex-PIMCO CEO and just brilliant. And he said in this very, very interesting article and speaking that I heard is that we're not just headed for a recession. We're headed for a profound economic financial shift. And he talked about three major trends that are transforming the world economy. Number one, he says, we were moving from a period of insufficient demand, and of course that's what kept the Fed at zero interest rate policy for so long, to from insufficient demand to insufficient supply. And that's where, of course, we've been right now, and that will keep inflation high, in my opinion, and I think he's right about that. He says there's a fundamental change away from central banks' endless supply of liquidity. And of course, we are seeing that as they are just in the early stages of starting to work down their balance sheet. I mean, barely have started. And interest rates still moving up, of course, and finding the level that they're going to stay. And number three is market volatility is here. As investors realize, central banks must stay tight for a long period of time. And in my opinion, he's talking about what I'm going to be talking about in my year-end show coming up in just a few weeks, where we're looking at what I believe is a long period of big volatility in the stock market. I'm talking about years to come. For now, the market is on track to have some pullbacks still in a favorable period. The peak to this bear market rebound, it's not in, but the risk rewards are far less positive than they were when we called the bottom just some weeks ago. Stocks, well, they're mixed for the week, really small changes. The Dow is the weakest of them all. It was the strongest and still losing less than 1% on the week. Other indexes are pretty much near the unchanged level or tiny little gains. Bonds, small gains for the 30s. They gain up less than a full point. But the 10-year yields drop about 8 basis points down to about 3.6%. It was down close to 3.5%. And another one that is right in our target zone, just absolutely beautiful. Gold market moves up $40, and I've got more to say about that in just a few minutes. And silver gains $1.37. It surges up on these lower interest rates and the sense that the Fed is slowing. And this is really what I've talked about, this doom loop, and that is that as the Fed starts to indicate that they're getting nearer towards this period of a terminal rate for interest rates, the commodities are going to explode to the upside. And that is going to keep inflation high, and that's going to keep this doom loop going, where the Fed just will not be getting the kind of information they need to actually have a pivot, which again, we don't think is coming in 23. Dollar loses 0.6% and it hit our downside target in time and price. Just another great bit of analysis by us. And now we're flashing a warning. The bottom to this decline in the dollar is coming soon. And we expect that to be very meaningful because when the dollar is moving up again based on current analysis and based on current correlations, the other markets are going to begin to struggle. So we think that is coming really fairly soon. And oil, big bounce, $5 back to the upside. But warning to that one, failure ahead. We don't think that there is a whole lot more on the upside for the oil market. Coming up in this show, Arby's going to give you a sample of Future Speak, and that's our member video, of course, and he's going to show you our analysis, the positive one, of the 30-year bonds. I'm going to give you a short-term view on the gold market, and we're going to look at the key levels in what is a bullish market. Then you're going to see Give the Gift of askSlim. This is our non-recurring memberships. Huge discounts. These are really our lowest prices. And we send you a gift back, an Amazon gift card. So you buy it for somebody, and we're going to give you back a gift. And that gift that you're going to give to somebody you know or to yourself, or you can use it as an upgrade. And then I'm going to bring a deeper look at the stock market than I have in the last month because we'll look at weekly and daily charts. Also take a peek at the VIX, and I'm going to show you our intermediate and short-term charts with our individual proprietary indicators. The big question is this rebound over? Well, I will show you that. And what I want you to do is to go to askSlim.com. Just subscribe, share, follow everything that we do. If you're new, get acquainted by signing up for a free membership. On YouTube, subscribe to our channel. Click that notification bell and like this video. Look for those shorts that I'm starting to put up there with, I think, some great information, and cue you in to go to some important videos that we post. And on Twitter, follow us at askSlim. Questions on anything I share with you on our membership, huge offerings of education and analysis, write to Matt at askSlim.com. This is a preview of FutureSpeak. FutureSpeak is a weekly video that we do for our members, level 2, 3, and 4. And this is a sample. It's going to show you our analysis of these 24 different futures contracts, looking at the 30-year bond market, which the analysis is positive. Show them this, RV.
If we pull up the 30-year, that's the ZBs, of course, see the weekly chart. Again, this has formed a clear short-term bottom, got into the rising phase on this minor cycle here as well. And now looking at some levels from 127.26 to 129.05, still looking for slightly higher here, and then for this to start to turn down as we get out into the early part of January, as that next low is only due towards the end of March to the early part of April of next year. If we pull up the daily, now this is also a very swamped cycle, as we've used up this whole cycle basically rallying, leaving a short window of time for a pullback. That is this right here, forming a bull flag with still higher highs throughout this whole period and really higher lows. And we have a bullish ribbon and a bull signal on the PO as well. So all this is really lining up beautifully. The Slim Ribbon PO is available for level 4 and 4 plus members at askSlim. And overall, we are looking for this to turn back to the upside. Levels on the downside come in from 125.27, and then we have a zone from 124.05 to 121.19, and good odds that we get a retest of this old cycle high at 129.05 in this next short-term rising phase here in the 30-year.
Love that. Great work on that. This is my analysis on the gold market. Short term, potential range trading ahead. Take a peek. This is the short-term analysis in gold. This is a cycle analysis chart on gold. We're looking at a daily chart. And what I want you to see that we have on here are several of our own indicators, some proprietary. So there indicators that we have on here are what we call our directional momentum. That's the slim ribbon, which you see right in over here. And also our slim ribbon PO, which is on the bottom, which is essentially a signal indicator telling us when momentum is resuming in one direction or the other. Also, we have in here our support resistance levels, and the on the bottom, these cycle brackets show us the energetic movements in the market, and up here these lines show you the actual movement in the cycle. In other words, how the individual cycle resolved itself and the information that we get from those cycles. So what we're looking at right here, as you could see, is that there was a downtrend in the gold market. As this was a lower low right here, we call that a negatively configured cycle. This was a lower low here, and this was a lower low here. So this was defining your downtrend. And each one of these rallies, as you could see, came up into the resistance level and then turned to the downside. And once they get under the key level of the previous low, they're likely to extend in towards the time frame of when the bottom comes in the next cycle. You see that also right over here. These yellow areas are the periods of risk where there is a strong likelihood of a decline because you have multiple cycles moving to the downside, as you see right here and here. Now there was a change in here as you saw this downtrend right there, and it then became an uptrend. And what you saw in here as the cycle here bottomed very much on time, as we expected, that this cycle right in here didn't have a lot of time left to have a correction because it was very late. We'd call this a right-hand translation. This area right over here, see that vertical line and that vertical line, these are cycle lines, which give us the timing that we expect the low to come. It's on either side of the ideal bottom by some number of bars, 3-4 bars or so. And then the bottom comes here on that hammer that you could see that formed. And the slim ribbon, which was positive right in here, stayed positive as it hit the support buy zone and then began to move up again. So this was a very positive occurrence where you had this configuration and translation of this cycle so positive. The market then moved up, and the expectation was that it would surpass that peak, and it already did that, as you can see. Now pulling back here, as this news came out of higher wage inflation on Friday, on December 2nd, and the question is, well, where are we headed now? Let's first take a little bit another look, looking back at the indicator, the slim ribbon PO. And you can see in here where the slim ribbon was negative. In other words, it was configuring to the downside. And the slim ribbon PO was giving you signals of downside resumption here and here and here. You could see that. Then when you got over here and the momentum turned green and you had positive conditions, then it changed. And when this cycle bottom came, you actually can see a bullish resumption of momentum on the upside with that green upside arrow. And momentum is still positive in here. Now, for the weekly chart, which I'm not going to show you, the intermediate momentum is also positive. So when you get into a period where you have positive momentum on multiple time frames, then you get into a period where the upside is much more likely than the downside. So we're getting this pullback right in here. And our target was getting up to maybe 1840, 1845. And up over here is a major resistance up there at 1845. There also are supports in here that come in, and these are minor supports because they're built off of the minor cycle right in here. And you could see the slim ribbon often gives support or resistance. You saw that all through here where it gave resistance. So if it continued to pull back, it's likely that the minor support would hold it. And we call that a buy zone because we have upside momentum and upside configurations that say it's not likely to get under that zone. So what that tells us is because there is some big weekly resistance above, you can see that zone up there from 845 up here to about 1898. That's a big, thick resistance area. It's likely to have a problem getting through that for now. There's also an older cycle peak right over there at around 1840. So that 1840, 1845 looks formidable right now on the upside. At the same time, with the slim ribbon and momentum configurations positive, and this buy zone right over here, it is very unlikely to get under that level at about 1767. So what that does is it defines a range for us in here. And that's really where we think we are right now in this gold market, whereas the stock market is digesting what was a more dovish tone out of Powell, and at the same time looking at hot inflation as far as wage inflation goes. Well, that's likely to help the stock market also be in a range, and we think that this market right over here, the gold market, is going to be in a range also, as defined right in here by these minor supports and these very significant resistances. Of course, you can decide how you want to trade that in what we think is this range. That might be good information for people that trade strangles or straddles. Also could be good information for I think the bullish side of this is more correct. So if it got into these buy zones here, then I think it would be moving to the upside. Note the timing in here. This is silver, which calls for a correction down into mid-December. This is the gold market right here on the minor cycle that calls for a correction down into about the third week of December. So this could be a choppy area right in here as it's in the range and ultimately get into these buy zones here, maybe mid to third week of December, and then getting ready to move up again based on this. So the look in here is really overall positive. So I have a positive bias, a buy zone in there for that, and at the same time, a defined range on the short term here for gold. I hope you thought that was extremely informative. Stock market short-term view, but first, give the gift of askSlim. Don't miss this great opportunity. Announcing the askSlim Holiday Special, Give the Gift of askSlim for 2022. This is an amazing offering. Special rates for 3-month memberships that are non-recurring, of course, because we're giving the gift. Give the gift to someone you know who loves trading. Give the gift to someone you know who loves technical analysis. Or give the gift to yourself. Great for first-time members. Use the special to try a higher level membership if you're already a member. And there's a bonus gift for you. We give you an Amazon gift card for making this great purchase. So much to show you in here. We're going to look at this level 2 special holiday offer, 35% off for 3 months. That's only $114.75, 38 and a quarter a month versus 59 per month. Plus, we're going to send you back $20 gift card for Amazon. You can go to askSlim.com and I'm going to show you how you can learn more information. The next one is our level 3 special holiday offer. Special $35 off for 3 months. That's $232. That's $77.33 a month for this jam-packed gift that you can give. That's a regular $119 a month, so great savings. Plus, we're going to send you back a gift card for Amazon for $50. And our level 4 special is just as great, if not better. Level 4 special holiday offer. It includes our custom Thinkorswim charts and proprietary studies and indicators. So you have to have a Thinkorswim account to benefit from this. Special 35% discount is $303.75. That's only $101.25 per month versus $159 per month regular. Plus, we're going to send you back a $100 gift card for you. This absolutely is amazing offers that we're giving now. And of course, these are non-recurring. This askSlim holiday special, Give the Gift of askSlim for 22 with this bonus gift for you where we send you back these Amazon gift card. Special 3-month memberships, non-recurring. Give the gift to someone who you know loves trading or technical analysis. Give the gift to yourself. Great for first-time members. Or use this to try a higher level membership if you're a premium member for 3 months. Go to the top of the askSlim.com website and click that Learn More button, and it's laid out for you beautifully. You can see everything that's available in every one of these member levels. If you want more information, of course, you can write to Matt at askSlim.com. And he will be able to give you all the information that you need. I know you're absolutely going to love giving the gift of askSlim for 2022. Stock market, S&P 500 weekly and daily cycle analysis. This is the full analysis of the SPY that I'm going to show you. You can get our full analysis with all of our proprietary indicators, the key levels on all of the indexes, SPX, NDX, and RUT, by becoming a subscriber. All premium levels get the SIR daily. This is an amazing report that's put out every single day. So this is for levels 1 to 4. So just a fantastic report. Please do subscribe to one of those levels to get that report. Questions about that, you can write to Matt at askSlim.com. All right, so let's look at the stock market here. This is the SPY on a weekly chart. give you a quick primer that on what's on here, and that is we're cycle analysts here. The cycles that you see, cycle brackets you see in the bottom, are not the cycles. They're just simply the energies in the market, as we call the heartbeat of the market. And you can see how the key low was right over here and here. Those are those vertical cycle lines there and there. Those are how these cycles actually made their troughs. Cycles are measured from trough to trough and have very common lengths, as you can see. This cycle resolved itself in a very bullish fashion where there was only a little bit of time to decline. That's these yellow zones that you can see right in here, periods of risk. And when you get positive upside momentum and positive shapes, configuration to these cycles, then you're in a bull market. You could see there's it goes up in this everything bubble that we had here. Then the market peaked, made that head and shoulders top, is very typical, and we got into the Great Reset phase one. If you see my year-end show coming up towards the end of the year, then you will get my longer-term view and understand why I'm calling this the Great Reset phase one, because I think that the Great Reset is going to take years. So let's take a look now at the intermediate analysis as we look from the peak market right over here and look at the cyclic action. Now let's just look at the minor cycle right in here. You see that one right there? This one right in here, and then this one right in here. So when you get into periods where the cycles are confirmed negatively, they're formed in a way where each low is lower. When you get into these corrective periods, the declines are very sharp. You can see that right there and right in here. Question is, are we now in a stronger rising phase where this key level over here will not be broken? Or will it be broken? And if it were to happen, it would likely happen way out here in the February-March period where we get into that next period of risk. That means that this minor pullback right in here is likely to hit supports and then move up again. Right over here is what's called a VTL, valid trend line, which comes off cycle peaks. You can learn about valid trend lines in our cycle analysis workshop. And you can see in here, it kind of gets right up to that VTL and then begins to pull back. And there are thick resistances up here. This is the major 50 at 414. This is the intermediate 61.8 at 419. Our original target, first target, was to get up to 406. And you could see it easily did that. Now we're very soon going to get into a period where this is likely to correct. Now, here on Friday, on December 2nd, the news was bad on inflation in the employment report, so the market began to pull back, but doesn't necessarily mean that the top of this minor advance is over. You still could get higher ground in here. And again, 414 is our next target up here. But this 414 to 419 range is going to be very difficult to get through. The expectation is that there will be a pullback here into the somewhere mid to late December period, and then move up again in January. And there is an important VIX trough. The low in the VIX is out in that mid-January period, and that speaks to the fact that we believe that there will be a peak somewhere out over here in mid-January. So if this were to follow the pattern, you would get some gyration right in here, a pullback somewhere around near the 386 level, and then that would occur sometime before year end. And then another upside move to try to test these resistance levels here again. Now, this is an upgrade that we gave it today because now that we've gotten up to the VTL and past this 406 level, the likelihood is pretty good that after this pullback, the next peak will be above this peak. So we've upgraded that because of the probabilities based on the information that comes out of the cycle patterns in here. So again, based on the weekly, a pullback here into sometime in December, and then another rally, and then this is where the big period of risk comes in from sometime January through March, where there's a potential for a decline that would be very severe and potentially getting down all the way to 320. Now, if this low over here that was made in October is the low of this bear market period, then what would happen would be that this decline in here would not make a new low, and it would give us very valuable information. The probability of that happening is smaller than the probabilities of taking out this low underneath that area that it made back in October. So it's a higher probability that it takes out the low, and there is some probability that it stops there and then the next period of rally comes out over here. So right now we stick with our thoughts that this is still a bear market, and that all of this that's going on in here is a rebound in the bear market that still has time to go. I want you to see right over here, this is a reversal scout. Now, where the reversal scout turned negative right here, it set up that decline. When it turned negative right over here, it set up that decline. Here, where it turned positive, it set up that advance. So this is what we use on our chart, many of our charts. I love to use it on the weekly chart, and it's still positive. So there's still upward momentum pushing up in the stock market right there. And that is likely to keep this to be quite a modest pullback, as we say, only to 386 on the downside sometime in December. So now when I switch over to the daily chart, let's remember everything I said in there. Here is your daily chart right there, and you can see that major resistance up there from the weekly. This is the resistances in the weekly that we talked about, 414 to 419 right over here. And you can notice in here what happens during these corrective periods right there. You get the pullback, you get the pullback. That was very sharp. This is very sharp. And this is super strong right in here. We call this a swamped cycle, where the energies that are pushing on the upside, as reflected as I showed you on the weekly chart with the reversal scout, are also reflected here in the positive slim ribbon. You also have our slim ribbon right over here on the bottom, which shows you that when it's green, it is not only positive, but when you get these arrows that you see right over there, it tells you that there is a strong potential of an upward resumption. Just like over here where you had the negatives and it showed you a strong potential of a downside resumption, here's where you had the strong potential of an upside resumption. These two lines right in here said that this is the time period where this cycle was like the bottom, and then it was likely to move up again. And you can see that there are some minor resistances right in there. Let's just come in a little bit tighter in here so that you can see what we're looking at right in there. And these are supports right there. So the minor supports are coming in right over here at 402 down to about 397. For now, that looks like it will be what holds the downside in here, and the market may try to get up to that level up again at 414. But if it starts to get under that level, and if it gets under 390.14, that is this low, it will set the intermediate minor peak that I showed you on the weekly chart, and then that points down over here to that 386 level that I showed you on the weekly chart. So all of these multiple time frames that I show you here in the analysis we put together is how we develop our projections here using the cycle analysis that we do all the time. Our 4 analysts are expert in this, and it's amazing the great job that we get out of Arvi and Katie and Matt applying as they understand the analysis to everything they do. So we're the only people in the world that have this type of analysis and present it the way that we do. Excuse me, so that you can see the analysis with the explanations and the clarity that we present, the way we present it to you. So stock market on the weekly, I showed you still positive and likely to be moving up with a potential decline into December, and then another upward move into January. That's what we're looking for. I showed you that on the weekly, and this is how it's illustrated here on the daily. Resistance here in this level, 414 to 419. Minor supports here from 402 down to about 397. If you break this level here, you're in the intermediate correction, likely going down to 386, an outside chance of 378, Probably not likely. And then moving up again to that area of peak that we're talking about in January. So now let's just look at the VIX on a short-term basis, VIX, because what I want you to see in here are these cycles that are very important. And what they point to, and you can see right over here where the VIX made its low on this cycle, what it points to is that where this bottom came, you can see implied volatility's peaked, spiked. When this bottom came, implied volatility spiked. When this one came, implied volatility spiked. Now in here, it was a bullish market, and they only went up for about 6 days. That could be what's coming right over here. So we're looking for, remember, a decline in the stock market into sometime like mid-December, late December. This is that period where implied volatilities are likely to spike. And then after that, because we think the stock market is likely to rally, it then would be pushing implied volatilities probably back down to 20 or lower out into this period in January. So again, this is inverse to the stock market. And what it's pointing to is this period right in here that is very likely to give you a low in implied volatilities in the next couple of days. Again, this is the range of time right over here, and that points to the peak sometime out into maybe the first or second week in December, and then that's the peak in the stock market, and then after that, an upward spike in implied volatilities that probably doesn't last very long. That just illustrates the likelihood that the stock market it still has quite a ways to go before a peak. The sum of the evidence that I brought you with all of our indicators is suggestive of the fact that the stock market is, while it probably has a pullback coming here in December, will probably not pull back very high, very far, maybe 386 on the SPY, and then get another move to the upside as we look for that next target at around 414 on the SPY. I hope that was really clear to you. We do this in a way that we teach as we go because we want you to learn our style of analysis. And of course, we want you to become a member here at askSlim.com. There is no better way to do that than to take advantage of our holiday special, Give the Gift of askSlim. There is a expanded version of this, of what's included if you watch in the full market week show, or you can go up to the learn more button on the front page at askSlim.com, click on that, and you get all the information about this amazing gift that you can give. You can give it to yourself even. And if you do give this gift to yourself or to somebody else, we're going to send you back a gift card, depending on which level you subscribe to. Go to askSlim.com and click Learn More, and you're going to see just a fantastic offer that we're giving you. Great for yourself, great for other people who are interested in the market, and just great potential if you're like a level 1 member or free level to upgrade and give it a try for 3 months. These are non-recurring, so you'll just have it for 3 months and then you'll decide if you like it or not because it will expire. That's it. I hope you have absolutely loved this show. Please do explore the askSlim site. If you're new, become a free member, get acquainted. On YouTube, subscribe to our channel, click that notification bell, like this video, give it a thumbs up, and watch all our member videos that are in the playlists there. And on Twitter, follow us at askSlim. Any questions you have about our specials, anything about our memberships or about the website, write to Matt at askSlim.com. That's it. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.